Let's start our results service now. I'm, for one, am very guilty of only focusing on the sort of top 40 or the top 100 companies, looking at macro stuff, but there are some heroes on the JSE, the companies that will become medium-sized and bigger in the future, and I don't tend to look at them, but that's going to change right now because there's a company called Adapt IT, which has come out with some results. Let me tell you about the company first of all. It says here, this is its own press release, an innovative information technology services and specialized solutions provider delivering IT solutions to some of the most successful education, manufacturing and financial services organizations in 20 countries worldwide. Good numbers as well. Revenue increased for the year to the end of June by 36% to 306 million. Operating profit up 32%. Headline earnings per share up 28%. On the telephone now from a hotel in Cape Town is Sabu Shabalala, who is the CEO of Adapt IT. Lovely day in Cape Town. Quite nice numbers, Sabu. Well done. What is your opinion overall, generally, about the last 12 months?
Thank you, and we are pleased that the results of this year show that the sustainable growth strategy that we adopted and have been implementing for the past 6 years now is really yielding results for our stakeholders. So,
and you sort of changed the way that your company is structured as well. Sorry, Sabu, you say here that you've got operational efficiencies, and I'll quote you, through an amalgamation of the company's subsidiaries into the main operating subsidiaries. So apart from your strategy, your long-term strategy, sort of from an infrastructure point of view of the company, that is, you've also changed things.
Yes, most definitely. And this is a function of our company growing. And 5 years ago, we started out in Durban, and we had one manufacturing division. And we've grown the business to be represented in 3 regions within South Africa. That's in Durban, Pretoria, and Johannesburg. And we focus, our focus is of delivering value and in ensuring that we extract efficiencies between our own businesses to make sure that the customer experience is similar.
You focused on 3 particular sectors of the South African economy, namely education, manufacturing and financial services. Financial services I understand because it's probably the biggest industry in South Africa, whether you like it or not. The other one's education and manufacturing. Manufacturing not doing too badly. Our PMI over the last 4 months shows expansion. Education very interesting. Are these 3 by design, or did you just stumble across them through contacts or whatever? Did you sort of definitively choose these 3 yourself?
Yes, these are by design, and we've made sufficient investment in ensuring that our business has the necessary specialists who specialize in these markets and ensure that our customers get the necessary expertise that they expect for their businesses, predominantly in manufacturing, education, and financial services, which is really a new area for our business. And we expect to make further investments in ensuring the growth of that sector.
I find it quite interesting that as a relatively small IT company, you're able to thrive and bring out some numbers that are above the average for the IT sector on the JSE Securities Exchange. Are you able to do that through your BE credentials? Are you able to do it because you're nimble and smaller and go for sort of contracts that would be generally ignored by the bigger players? What's the story?
We are able to extract efficiencies from servicing our customers, and especially because our revenue mix, we predominantly a software business, and we own intellectual property for the software that we offer to our clients. And what that does is then it ensures us quite a high annuity revenue level of around 40% at this point, and we aim on growing that. But further to that, we've been able to add strategic services, and in the last financial year we added cloud services to our business, and this has yielded very good results for our shareholders.
That 40% annuity revenue is very, very encouraging. As you say, you hopefully will grow that. What also is encouraging is the fact that you are operating beyond South Africa's borders, and yet 77% of your money earned is in South Africa. Are you hoping that that actually becomes less because of an overseas initiative, if you like?
Yes, we do have, our software does run in companies around the world. We are seeing quite a growth in the African region. So the investment that we would be making in the next year will be to ensure that the growth, we can take advantage of the growth within the rest of the Africa market.
You've got a strong financial position. You say that you want to enhance shareholder value. Of course you do. Otherwise you wouldn't be listed. The key objectives, you say, the first one is to consolidate the sector focus in those three things we've spoken about: education, manufacturing and financial services. What I'm interested in is a slightly bigger picture, though, Sbu, and that is where IT fits into the current economic cycle in both South Africa and Africa. We had results out from Cisco in the United States over the last a couple of weeks. They're shedding 4,000 jobs, and they're sort of hinting that IT spend is on the wane. Are you seeing that, or are we in a different part of the economic cycle globally?
Globally, customers are looking for much more efficient ways of providing ICT. And we, as a much more nimble, smaller organization, are very well positioned to provide the services at a very cost-effective price for our customers. And as I said earlier, that we introduced cloud computing, and cloud computing as a new and growing area of providing ICT gives our customers the ability to run their business and leave all the ICT to companies like Adapt IT. And this is where I believe the landscape is changing internationally, where most customers are looking for much more efficient ways of providing ICTs, and which is what Adapt IT is able to do for customers.